There we go. All right, this is amazing. All right, this is great. I'm gonna actually let me just hold on one second. Let me just pause. All right, perfect. All right. All right, guys, welcome to one of the more celebratory events that we've had at the beginning of this year. And that is something that we were talking about towards the end of last year, and that is the Singlife acquisition by Sumitomo Life. And I'm here with my partner, Kristaps Ronis, from IonPacific, who introduced this deal to us. And we invested alongside them in our Danju Partners Encore Fund. And this has been one heck um, of an exit for several reasons, notably probably because it's the first one in the fund that we'll have, even though there's been others that are seeded to come out and actually go to sale, or these companies will IPO at some point in the future. However, there's been a lot more here because there's been a global stage that might have affected this too. It might not have been as it might not have had a happy ending in the past. It might not have had as much of a happy ending should have anything changed geopolitically. But fortunately, with the investing and with the foresight that Kristaps and his team have had, we've been able to come out of here with a profit. And that's something that is very, very admirable. And that's something that we are looking forward to as well. We're going to go over a lot of things. I'm going to ask Kristaps some questions at the end. You might remember Kristaps from maybe one of the interviews he did with Christine Haas not too long ago, talking about how much we love working with you. My partner Albert wanted to be on here, but he actually just landed in Hong Kong 3 hours ago, your old stomping grounds. So he's going to be there until, I think next week. But we are recording this for everybody and all of our investors here to use as really more of a case study for showing people what success looks like, especially when you're making these private direct investments into these companies and what you can expect to see on the way out and engineering this. I think, Kristaps, everybody knows my background. If you can just give a little bit about your background, talk about your family, your two cute kids and everything that you send the Christmas cards over and everything, I would appreciate that. And then maybe we can go into your presentation. I want to keep it conversational. There are going to be some people that have questions, of course, and we'll take those on the end. I will ask the questions first before we do anything with that, and then from there we'll just. I don't think this should take more than 30 minutes, to be honest with you, but it'll be immortalized for the rest of our lives here. So this is great. Kristaps, welcome to Brahmin Partners, even though this is the Danju Partners deal that we put together through my family office and my fund. That's the rebranding we've gone through. A lot of people are going to be asking what that means in the future. Stay on the lookout for your emails. We have some great events planned for you virtually, especially on May 6th that we're planning to do. I'm sorry, on March 6th that we'll be providing to you guys going forward. So, Kristaps, there's a lot of people who are going to be watching this, probably to the tune of maybe 1,500 people by the time this is done. I know that it's 11 o'clock where you are, and it's 4 o'clock, and it's usually kind of a wonky time for us um, to have these types of conversations. But given the time constraints, we didn't want you doing this at 3 in the morning either. We wanted you fresh, no matter what that looks like at 11 p.m. We do appreciate you making this opportunity to talk live to our investors, but also for this recording. So, Kristaps, welcome. Thank you for joining us.
Sal, thanks so much, and it's a pleasure to speak with all of you today. Just by way of introduction, my name is Kristaps Ronis. I'm a partner here at IonPacific at a global technology investment firm. Today, I'm very excited to speak with you about Singlife, which is an investment that Danju Partners took part in. And the great news here is that we are expecting a very near-term exit from this investment. I sourced and led the deal back in the day, and I'm incredibly thankful to Sal and Danju Partners for their support in this investment. I have a short presentation here. I'll share my screen with Sal's permission, and we can go through some of the stuff I wanted to cover today. So very briefly about IonPacific. We started the firm back in 2015 in Hong Kong, of all places, simply because our previous business was there and the founding team, including myself, was there. So we have quite deep Asian roots. But since day one, we've been a global investor, and we are very focused on providing liquidity and creative financing solutions to the global VC ecosystem. I would say about half of our investments, we partner with venture capital GPs, family offices, and corporate venture arms around providing liquidity and financing solutions for them at portfolio level. And then the other half of the investments, which is probably more relevant for the Singlife case study here, we partner with founders, management teams, and early shareholders of single companies to help them with various financing solutions. Our firm has global coverage, 3 offices, Hong Kong, Zug in Switzerland, right next to Zurich, and Los Angeles. Our portfolio spans North America, Europe, Israel, Southeast Asia. We currently manage about 450 million in AUM in 2 flagship funds and a number of SPVs that have consistently delivered top performance that we're very happy about. And across
Stonecutter, right? Is Stonecutter one of them?
Stonecutter is our flagship fund. We're currently
Yep.
raising. Great, exactly. You're absolutely right.
I
So
remember you. Yes, I remember everything here. Thank you.
Right. Yeah. So across all of our products, both direct and indirect, we have exposure to about more than 200 companies. Before diving into Singlife, I think it's worth highlighting that over a quarter of our portfolio is in Asia, and within Asia, we predominantly invest in Southeast Asia and Singapore in particular. We have been investing in the region since the establishment of the firm back in 2015, and even before that through our previous firms. And I think the rationale for allocating to Southeast Asia and Singapore in particular is very simple. It's because of the region's strong macro story with exceptionally high GDP growth rates, massive emerging middle class population with growing disposable income, and very significant growth of the region's digital economy. So I think all of these aspects combined together contribute very favorably to the growth of the technology sector in the region. And there are several sectors that we're particularly excited about in the region, and fintech and insurtech are definitely among those, and hence our investment in Singlife. Now, moving on to the next slide, let's talk about the actual business. What is Singlife? To those who partner with us on this deal, but don't remember what Singlife does, here's a quick refresher. Singlife is a fully digital life insurance and savings business that was established in Singapore in 2014, operating since 2017. Singlife was the first local independent life insurance company to be licensed by the Monetary Authority of Singapore, i.e. the local regulator, since 1970. So over 40 years, Mass Mutuals of the world, HSBCs of the world, AIAs of the world came into Singapore, but there was no local independent life insurance player that was licensed in the market, and Singlife was the first one in this century. The business over time has been supported by very strong financial and strategic investors, Aflac, Sumitomo Life, Aberdeen Standard on the strategic side, and I think from the financial investors, TPG is the best known of those. And I think it's worth mentioning that right after starting their operations, once they got their license in 2017, they almost immediately acquired Zurich Life's assurance business in Singapore, with policies providing over $4.5 billion of coverage. So right off the bat, as a startup in the insurance scene, they were right away managing their large insurance book, which definitely put them on the map. And then in 2021, and we'll cover this in more detail later in the deck, Singlife completed another landmark transaction, in which they merged with Aviva's Singapore business through a $2.3 billion merger. So after the merger, Singlife was really one of the big players in the market, became the 6th largest life insurance company in Singapore with about 7% market share.
That's insane. That is incredible.
That is fantastic, and we'll go in a bit more detail around how that happened and why that happened later in the deck. I think overall there are quite a few reasons why we like the business, but I think the highlights are, number one, it's a real disruptive business with a proven track record, operating in a very regulated industry, which we always like. Singapore itself is a top 3 global private wealth hub. And it's continuously growing. We'll have a slide later in the deck around the AUM growth in Singapore life insurance and asset management industry. Next point about the team. This is definitely not yet another tech startup run by 20-year-olds trying to disrupt an industry. Real industry veterans with decades of experience in life insurance industry, particularly in the region, right? Moving on to the background of the deal and the sourcing of the transaction, I think first and foremost, I want to talk a little bit about the founder of the company. Walter de Wood, originally from South Africa, is the founder and original CEO of the business. He's a real veteran in the life insurance industry in Southeast Asia. Before founding Singlife, Walter was for, I think, 6 or 7 years, the CEO of HSBC Insurance in Singapore, and previously held several regional leadership positions with Willis Towers Watson and Swiss Reinsurance Company. We got in touch with Walter in June 2018 through our network of relationships in the sector. Walter reached out at the time as him and Singlife management team, they were in need of a somewhat creative liquidity and financing solution. Aflac, the $50 billion market cap US insurer, had just completed a $20 million strategic investment in Singlife at a $200 million pre-money valuation. So things were going well. However, the business was growing so rapidly that they needed to raise additional capital to comply with the regulatory requirements in Singapore. The board had approved a $20 million internal round at a very attractive valuation, $150 million pre-money. At that time, Walter and his management team held about a 35% stake in the company, and their pro rata in the round was about $7.3 million. However, they did not have the capital to contribute to the raise, and had they allowed other investors and shareholders take up their pro rata, they would have been significantly diluted, both economically, but also, I think most importantly for them, from a voting power perspective. So in order to avoid this dilution, they were looking for something creative that would allow them to participate in the raise. And that's where IonPacific came in. So we financed their participation in the raise through this deal, and I'll discuss the terms on the next slide. We deployed $7.3 million along with our partners and enjoyed an immediate markup of our investment by 33%, given that Aflac had just invested at 200. So there was quite an interesting valuation arbitrage at the time. Moving on to the actual terms of the deal and how we were thinking about this. So we wanted to retain, obviously, as much of economic upside as possible for ourselves and our partners, while somewhat compensating Walter and the management team for allowing us, an external investor, to effectively participate in an internal round of the company. So we came up with an MOIC-based profit-sharing mechanism with Walter and the team. So up to 2x MOIC, IonPacific and our partners, we keep 100% of the proceeds. They get absolutely nothing. Between 2 and 3x, we would share 20% of the upside with Walter, and above 3x, we would share 25%. And these profit-sharing amounts are for the respective differences between 2 and 3x and above 3x. In addition to that, we also agreed that the management team would retain all voting rights associated to the shares in Singlife bought in the round. And in turn, IonPacific would retain all the rights related to the eventual sale of the shares. So when the time came in December 2023 to make a decision on an exit from the investment, it was entirely up to us and there was no counterparty risk. What that meant for the transaction dynamics, the management team had maintained their voting power in the company, and through the profit sharing mechanism, the team was incentivized to continue maximizing the value of our shares. And for IonPacific and our partners, it was an exceptional opportunity to participate in an internal round of the company at a very attractive valuation. To understand the bigger macro picture, let us briefly look at this slide. Back in the day, our research clearly showed several findings. Number one, Southeast Asia was expected to be the fastest growing life insurance market globally, growing at 12% per annum between 2016 and 2025. Number two, the penetration of life insurance back in 2018 in Southeast Asia was 4.1%, significantly lower than the averages in developed Asia of 13.6%. So when we typically speak about developed Asia, we think of Japan and South Korea. And the total life insurance penetration was very low in most of the region, while in Singapore, it was more in line with the developed markets, again, demonstrating massive opportunity for expansion in the region. And number three, strong growth of the economy, rising disposable income, yet absence and lack of strong social security frameworks. And we expected, and we proved to be right, that this would drive the demand and increase the demand for various types of insurance products in the region, which was great. Then speaking of Singapore in particular, first and foremost, as I mentioned, it's a top 3 private wealth hub globally.
Yep.
In 2021, the asset management industry there reached 5.4 trillion Singapore dollars, with double-digit growth rates in total AUM and traditional asset classes, and a whopping 30% growth rate in alternative assets managed in Singapore. In addition to that, the ultra-high net worth population in Singapore is expected to grow by 30% between 2021 and 2026, the fastest pace in the region. On top of that, we also saw that definitely Singapore stands out as a trusted jurisdiction because of political independence, very simple and straightforward regulatory requirement, established trust services and such. And also relatively low taxes in line with Switzerland and Hong Kong, which is very interesting and definitely promotes inflow of capital into the country. 75% of funds under management in Singapore were originated outside of Singapore. So there's definitely massive capital, which is great for life insurance businesses and savings businesses and investment businesses like Singlife. In terms of competitive landscape, we can clearly see that Singlife was competing against a number of global names such as HSBC and AIA, as well as some regional players, FWB from Hong Kong, Great Eastern and Zhong'an Insurance from China. From a product and offering perspective, what made Singlife stand out was its digital-first focus and the ability to really deliver a full range of services throughout its online platform, while all the other players were only introducing the solutions to the market at that time. Moving on to the next slide, Singlife has a relatively short history, as they only started operating in 2017, but it's a very impressive history, right? In 2017, after 2 years of hard work, Walter managed to raise a $50 million Series A, and that's in US dollars. At the time, it was by far the largest Series A round in Singapore. They got the MAS license, first, independent and local firm to do that in 40 years. They immediately launched their high net worth business and the retail business on singlife.com, which was something completely new. At the time, nobody in the region was offering similar digital-only solution. 2018 acquisition of Zurich Life. Everyone was asking, how the hell did they pull that off? They just got their license last year. This year they make such a big acquisition. That inevitably attracted lots of international attention. Aflac and Aberdeen completed their strategic investments. Right after that, IonPacific, together with our partners, we came in at that very attractive valuation. Company continued to grow and expand. They started to launch a joint venture in the Philippines, started looking for international expansion. Along came Sumitomo Life, number 2 life insurance company in Japan, led a $90 million growth round in 2019. After Singlife launched a couple of very important initiatives, including Singlife Account, which is a current account and savings product for the retail market, in partnership with Visa, which meant that Singlife was now allowed to issue actual physical Visa cards. Right when COVID started, and we'll discuss it in more detail on the next slide, Walter and the Singlife team really, decided to swing for the fences and completed a $2.3 billion merger with Aviva, with the help of obviously TPG, which came in as a new financial investor in Sumitomo Life. And then at the end of 2023, we get a letter from Sumitomo announcing its plans to acquire initially Aviva's minority stake in the business. And then after some deliberations, they offered to purchase 100% of the business. And we agreed to happily tag along. Throughout this relatively short history of Singlife, they have received numerous industry awards, including the Best Digital Life Insurance Initiative of the Year, Best Digital Experience, InsurTech and FinTech Fund Brand of the Year, and many, many more. So we're very happy with how this turned out. Very briefly on the Aviva Singlife merger, it was announced September 2020. The deal had been in the works for about 9 months, and the process was periodically interrupted by the COVID pandemic, but Walter and the team managed to pull it off with TPG and Sumi. The rationale for the transaction was twofold. Number one, in late 2019, Aviva was exiting pretty much all of their non-core markets. Despite having significant customer base in Singapore and multiple decades of track record in the market, it was very difficult for Aviva to make money in the market given their large headcount and massive overhead costs. And that leads us to number two. In this, Singlife really saw an opportunity to combine its fully digital solutions with Aviva's massive distribution channels and create like a real life insurance and savings powerhouse in Singapore that is capable to successfully compete with the incumbent giants of the industry. And I think for me personally, and I think for the IonPacific team, this was a real turning point for the business where that local insurtech brand that we invested in initially turned into a real corporate player able to compete with the other players in the industry. And that leads us to the most important, more interesting section of the presentation. How did we create value and eventually make money? So in this very simple chart, we can see the key value creation events before and during the life of our investment. We start with Aflac and Standard Life Aberdeen investment in 2018, followed by this internal round in our investment in the firm at a significant discount, and then 6 months later, followed by a valuation markup all the way up to 270 for both rounds of Sumitomo investment, including fundraise for the merger with Aviva, and then eventually a quite significant exit this quarter, which is $3 billion US, 4.6 billion Singapore dollars. And the exit process is relatively straightforward, with Sumitomo initially announcing the purchase of Aviva's minority stake in the business, and later negotiating with TPG to purchase their 35% stake, which then automatically triggered the tag-along process, allowing all the other shareholders to sell shares at the same price. Eventually, everyone tagged along, including ourselves, and so after the completion of the transaction, Singlife will become a wholly owned subsidiary of Sumitomo Life. The transaction is subject to regulatory approvals in Singapore and Japan, so we're still waiting for that to come through. We expect to deliver about 2.7x gross return, 2.2x net to our investors, which we're very happy about, especially given the risk-return dynamics in life insurance sector, which are very different from investing in very early stage startups. And with that, I would love to thank you for your time and open it up for Q&A.
Bravo, Kristaps. Bravo, my friend. This is amazing. Next time you come to Miami, dinner on me. This is really great. This isn't as clean as you made it sound or as you look on Zoom. There are some questions that I have that, in preparation for this.
Sure.
And I'll just ask. I mean, we are very happy. A profit's a profit, and I know that we're moving into real estate, and a lot of people are going to want to use these profits to move into these real estate deals we're coming into soon, and that's going to be great. What I have is, it sounds like Singlife had a great potential for international expansion in the region. Why didn't they pursue that more actively?
Yeah, that's a great question, and I've had these discussions with Walter and also the new CEO. I think the answer is really simple. They can only focus on doing a couple of things well at a particular point in time. They did really well with the acquisition of Zurich Life. They started the JV in the Philippines that is still going and doing reasonably well. But then the Aviva deal came and they had to pursue that as opposed to acquisitions or mergers in Indonesia or Thailand. Once the Aviva deal is they've realized that all the synergies, all the distribution networks are working as they had expected. I still think that this blueprint is a great blueprint to copy and paste into the massive markets of Indonesia, or do like a proper rollout in the Philippines or in Thailand. So I think that's still ahead of them, and I think there is a real international expansion story to be told.
Yeah, I think so too. There's a lot of people too who are asking me, a lot of people believe we're in a non-kinetic war with China right now, and there's a lot of geopolitical issues and stability issues, to put it for another way. But how is China's macro and geopolitical situation actually impacting the position of Singapore, the country itself, as a global wealth center?
Yeah. I think the answer is relatively straightforward. There are two wealth centers in the region. One is Hong Kong, one is Singapore. Singapore is much more independent and much further away from China. Hong Kong is the wealth center for Chinese individuals, and we've seen so much outflow from Hong Kong going into Singapore. So Singapore, in terms of capital inflows and in terms of assets under management, is really benefiting from it. As long as they remain neutral, and as long as they don't become geopolitically closer to China, I think they will only benefit from it.
Yeah, it makes sense. I agree with you there. And then just a couple, are there any open legal or regulatory or other issues that can affect the exit or the timing of this exit?
Yeah. So the transaction needs to be approved both in Singapore and in Japan. So the Monetary Authority of Singapore and the equivalent regulatory authority in Japan need to approve the transaction. I spoke with Sumitomo lawyers earlier this week. They don't expect any hiccups there, and they would expect that they get the regulatory approvals in the first half of March.
Wow.
Those are the only two outstanding items. We have zero control over this, but they're
of course
doing their best to push this through as soon as possible.
Wow. And then one last question about the beans. How are the profits going to be distributed to investors, and what's the timeline there, my friend?
Yeah, cash only.
You're speaking. I love it.
Cash only distributions. So the timeline is as follows. Regulatory approvals come first. 10 business days after that, the financial close takes place, and IonPacific receives the proceeds. And we'll need a couple of days to do the calculations and arrange the pro rata and do the distributions to the Brahmin Partners and the underlying investors.
We are very happy. We're ecstatic. I'm getting text messages now, which I'm ignoring. So just, I don't want to take the concentration off of you, Kristaps, because you are definitely the star of this show here. This is absolutely amazing. Kristaps, I'm going to say if there's any more questions out there, I want to keep it within a half hour, and I know people are going to be replaying this and going back, but if they have any other questions, of course, they can always reach out to me, and, we can handle those conversations for you, and we'll have to, we use NAV Consulting as a fund administrator, so we're going to have time for them to do the calculations and everything as well, before the distributions hit, but this is going to be a lot of fun. And I am very, very proud of the work that you've done. If you have any questions, please feel free to raise your hand right now. Marjo, how are you? Thank you for reaching out from Albania. We have a lot of old friends and new people here. This is something which we're going to post, and I'll send an email out to you guys later discussing this, but this is definitely a highlight, and it's a great way to start the year. Congratulations to all of you involved in the Dandrew Encore Ventures Fund. This is something that is really, I didn't think that this would happen this fast given the geopolitical uncertainty, but hey, here we are. And weirder things have happened, right, Kristaps? So we will be on the lookout for more good news from you and other opportunities, of course, that we're going to want to be working with going forward. But this is one of our first cross-border deals that we did with that fund, and we look forward to working with you here. Kristaps, thank you so much for everything. Everybody give him a round of applause. Thank you so much. All right. Wonderful.
Thanks, Sal. Thanks, everyone.
Have a great evening. Thank you, my friend. Take care.
Take care. Bye-bye.
Bye-bye.